Okay, welcome back to another trade recap. Well, there's going to be a few trades here. Everyone was saying price action is going to be so slow, it's going to be dead, not trade until the new year. One great thing about this strategy, along with many other things, is that even in low volatility, not great conditions, you can get trades, you can take winning trades. And this is what I like about the 1 minute time frame. It's simple, it's effective, it's repeatable, mechanical. This is the strategy that's made me profitable in a very short period of time. I have reached, I think, just under 5k in payouts on Top Step in the last 6 weeks. I've tried a lot of other strategies and not seen anywhere near the type of success or consistency that I've seen with this. So if you want to skip a lot of the rubbish, simplify your trading, do this. I mean, I keep saying, just do this, keep it simple, don't overcomplicate it. Don't add this to your strategy and take bits of it and mix and match it, just this. I don't want to talk too much because I'm not great at making these videos, but one thing I will say is that when you come and watch these videos, I'm showing you all the trades that I've taken. I'm not selling you anything. There's no courses, there's no indicators. This is completely for free. I've got friends and family that have been asking me about trading and about the strategy, and it's not realistic to sort of make videos separately for everyone and be on call with different people while I'm trying to trade, and I'm doing this around work as well. So that made sense for me to start a YouTube channel, and also I'll be starting to live trade shortly. And I hope that you guys can benefit from this and skip a lot of the rubbish that's out there. Don't be buying courses, don't be buying indicators. It really is a lot simpler than that. You don't need any of that. Right, so my first trade was of the week was on the 22nd. Yeah, so on the 22nd. And this is a London open trade. I believe it was in the kill zone. We're just going to go through checklist. So at the top here you can see my A+ setup checklist, but bear in mind we are not looking for all of these confluences. Another thing to understand is that you don't need the perfect setup to enter a trade. Okay, a lot of the time it's okay to just size down, have a tighter stop. A lot of my trades can be break-even trades, get to break-even as soon as possible, but get in, man. Like, the only two compulsory confluences in this trade setup is a liquidity sweep and an IFVG. I mean, inversion fair value gaps is what I trade, so without that you don't have a trade. Okay, right, so here we are. Let's have a look at this trade. Hope you guys had a good Christmas, by the way. Wishing you all the best for New Year's, man. It's a good time of year, one of my favorite times of year. My birthday was on Christmas Eve as well. That was great. I'm just gonna, because this camera's a bit in the way of my screen. I'm not good at this, that's what I'm saying. Anyway, here we are. So what do we see here? Let's go through our checklist. Have we got a liquidity sweep here? Now, if you notice here, we have got a sweep of liquidity if you count in these lows here, but it's not as, this is why I wanted to make these examples, because in this case, we don't have a significant sweep of liquidity where there's just a major low that we've taken out, okay? Now, the reason I took this, and I would say in the beginning, don't take these trades for now, okay? You have to have a bit more experience to know when you can take these trades or not. So I won't get into this now. I'll do it more on the live streams when it comes up. But in this case, we had an SMT on ES, meaning NQ started to reach down and ES didn't. Okay, if you know what SMT is, then you'll know why I took this trade. We got a nice displacement to the upside here. And this is our 1 minute IFVG. So this is accumulation, looking for AMD. Accumulation, manipulation, distribution. Okay, we just target a simple 1.5 in this case. And why do we TP here? It's our most recent high here. Can you see here? This is our recent high. We come down, that's your target. 1.5, it's not massive. You know, you hit 17 points there, but if you size appropriately, that's a decent move and no one's gonna sniff at that, right? Let's have a look what else we're looking for. Clean V shape. So we don't get a clean V shape here, but here we go. This is what I missed out on this. I knew there was something missing. So here we've got a 15 minute. This is why I marked this all out earlier and synced it, but it's just changed for some reason. So we had a 15 minute bullish fair value gap. Okay, so we have high time frame delivery. So we don't have a significant liquidity sweep. However, if you've got an SMT and a higher time frame delivery, I will size down and I'll enter the trade. Okay, it's riskier, it's lower probability, maybe a B setup, B+ at the most. The strategy bangs like 70 to 80% of the time, so you can even afford to take a few losses. This trade played out, so happy with that. So in this case, we had nothing significant in terms of liquidity, but as I've explained, we've also retraced to 50% of this range, which means we've come into a discount of that range. So these are other things that we'll go through on the lives, all right? I don't want to get too detailed in these recaps. I just want you to get the basic idea of the power, the simplicity, of these 1 minute IFVGs. All right, so there's 1.5 there. Did we have a break even? No, we didn't really have a break even here, but you don't need it. You've got this LRL here. This is low resistance liquidity, and I'm expecting to just run that out straight to TP. Exactly what we did, no resistance at all. So that's why that's called low resistance liquidity. So we didn't need a break even. Premium or discount, yeah, we dropped into 50% of this range here, and so that this is a discount tap here. This is what we want. Okay, kill zone, yeah, London kill zone. So good. Altogether, we've got no liquidity sweep, and IFVG, which is not as clean as I'd like it to be, but pretty decent displacement. So as soon as I see that and we close strongly above that, I'm happy to enter there. We do have higher time frame delivery. We have AMD, I missed that one, which is accumulation, manipulation, distribution. Break even we didn't need because we have LRL, which is low resistance liquidity. We run that out nicely. We're at a discount and we're in a kill zone, so I would give that at the best a B+ setup. And of course, in your own time, you're going to have more and more chart time, and you're going to have experiences where you don't enter trades and you're like, oh, it went to TP. You do enter trades, you get stopped out. Sometimes A+ setups can fail. You're just going to have to feel it out for yourself, and you'll come to a place where you're like, you know, do I take this trade or not? Okay, and that's just going to be chart time. Only chart time can really help you with that. Okay, so I can give you the basics, but at the end of the day, you're going to have to make your own decisions intuitively in the moment. Okay, what have we got here? So if we invert a key level in this way, Asia highs, and we tap back down into a key level like this, and we get a 1 minute out of that level, I'll be happy to take that long. Here we tap into Asia high, so this is time-based liquidity. All right, I'm very happy with that tap. As soon as I see that and we get a close above this 1 minute here, I'm entering all day long. I'm very confident in this trade. Do we have a break even? I believe we do. This would be, okay, this is good. So this is my break even. Why? Because I may have explained this before, but I'll explain it again in case you've not seen other videos. As soon as we hit this point here, the market has swept liquidity. And what do we know happens when we sweep liquidity? We get reversals, we turn around, which is exactly what we do here. So at this point, I would be, if we are offside and we're actually bearish and we're going to move down from this point, it would happen from here. So this is where we move to break even. So as you can see, and TP, if I can try and get this was the draw on liquidity, I believe, here. Okay, which is the most recent high on the 15 minute, which is here. This is the draw on liquidity. So if we turn around here and we're going to continue down, and this is not our draw, and our draw is say down here, then I want to be out of that trade by that point. And that's exactly what happened. This is a break-even trade. We get tapped out here. Now, important to note, okay, this is one great thing about this strategy as well. You're going to take break-evens instead of losses. It's so important to know to move to break-even at this point. Why? Because you can re-enter. Look, if we come back down here and we tap into this 1 minute here, which is, by the way, if you look here, we've now got, this is our initial 1 minute entry here, and we create another 1 minute here. So this is your re-entry here. I'm trying to just sink in layout here. Hope that this is making sense. Okay, I'm just going to do the long position here. So this is your entry here. Hopefully you could see that already with your own eyes, and stop either below the gap here or below the candle that created the SIBI, right? The sell side imbalance, buyer side inefficiency, which is a bearish fair value gap here. That 1 minute is your entry, and our draw on liquidity is the same. And at this point, you can be discretional. You can take profit here and then let some run. If you look here, that's like a 1.6 at that, unless you put your stop here a little bit tighter. These are things you're going to decide in the moment, after chart time. The main thing I'm showing you here is the entry. Now, on this occasion, I think I went for a 2R, yeah, a targeted 2R, which was hit pretty much immediately. I mean, look at that. It's like a 2 minute trade, 3 minute trade. That's what you want. Another good thing about these lower time frames, you're not sitting around for 2-3 hours in trades. It can happen if you get caught in a consolidation, but you're more likely to get stopped out at break even than sit through long trades, which I just hate doing. Okay, now let's move to the next one. I don't want to make this too long, this video. I like to keep it short and concise, and my intention is to share more details with you in the live streams, which I'll be starting shortly. Okay, so make sure you subscribe Pretty sure I had a short position out of that. This is New York Open. Yeah, that one's drawn in on this side, but not on the outside. Okay, yeah. This was a frustrating trade. I see a lot of people have a similar experience here. However, not many people re-entered. So, high time frame, we have got, first of all, let's look for our accumulation. This is your accumulation here just before market open, which is exactly what you want to see. Manipulation to the upside, distribution to the downside. Simple, simple stuff. This is a 15-minute order block. Notice how the last liquidity was this high here. We don't have a significant liquidity sweep. That's not really a sweep. That's more of a run. We ran liquidity. We're moving up for a while. But we tap into this 15-minute order block. Okay. Just quickly show you that so you can see what you're looking for. Hopefully you know the basic ICT concepts. You know how to spot an order block, a breaker block, fair value gap, liquidity. These things you should know before watching these videos. So I'm not going to go into the details of those basic concepts. If you want to learn that, go to ICT, or there's many other teachers out there. I would recommend go to ICT's core content on ICT's channel, yeah, Inner Circle Trader. This is your order block, 15-minute order block. That would have been mapped out because that would have been a target. I expect us to reverse from there if we're going to reverse. So as we're accumulating here, I'm saying, okay, well, in my mind, I'm bearish overall. We're just pushing into an order block. Now, interestingly, what happened here was we create our 1 minute. As you can see here, this is our 1 minute just before market open, which is exactly what we want to see. So as soon as that formed, I've marked that out. I'm expecting us to, as soon as we've opened this and we come down, I'm entering here. Okay. Now the reason I'm entering without a significant liquidity sweep is because we've tapped into this order block 50% exactly. In fact, that's a lie. At this point, we had closed down here, and we just opened. That candle pushed, and we had closed. Now, half of me was like, I feel like we're going to get a retracement higher for two reasons. Because we hadn't touched 50%, which we often do 8 times out of 10. We hit consequent encroachment of these PDOAs, and also ES had tapped in, but it also hadn't tapped any higher. So I had a feeling we were going to go up, but I entered anyway, and I entered with slightly lower risk, okay, because you don't want to miss this move. So we enter here. As you can see, we pull back up, we get stopped out here, and as soon as this candle forms and closes back below the 1 minute IFVG, we are re-entering. Okay, size down if you need to. All right, tighten up the stop if you need to, but get back in, because this will happen a lot. You know, you can, at market open, a very high volatility, you can get little spikes up and down, and you can expect to take a loss, but get back in. As soon as we close back below, get back in. And then this rode for 80 points. All right, so you wouldn't want to have missed that. And what was the TPs? Asia higher, if we look over here, was TP1. I think I just took full TP at TP1, but I've just put this, I've measured this out, I've marked it out, so you can decide, because we have Asia highs here as 1 TP, and then we have London lows here as a TP2, which we do actually get as well. But I'm pretty sure I came out at TP1 Asia high. Okay, so again, you can see how these 1 minutes love to form. We got accumulation, manipulation, distribution, simple stuff. All right, next trade. So when you take a break even, or when you take a loss, you'd be looking to re-enter if the conditions are correct. And obviously that's going to be chart time, intuition. You'll learn that over time. All right. Okay, I hope I'm not missing anything here, because I haven't got everything marked out in the way I should have. This is a great trade. I think this was my favorite trade of the week. It wasn't a massive trade, but you know, I think it was 37 points, you know, but I love taking trades out of new week opening gap or higher time frame. The volume imbalances are just, they are very reliable. So very happy with that. And this, even though we've got a little bit of accumulation here, this push up here, that's very convincing for me. I'm just like all day long in that trade. Very happy with that. I think I ended here actually. Okay, what do we have? I mean, as far as accumulation is concerned, it's not a great deal. I mean, this can be considered accumulation, manipulation, distribution, but it's not as clear as it can be on other trades, and that's fine. Again, these are not compulsory. There's a few compulsory. I mean, IFVG is the only thing that is 100%. You can never take a trade without that. That is the entry model. Other things you can mix and match, and again, over time you will work out what trades work better. The fact that we are tapping into new week opening gap, we are also sweeping Asia lows here, if you notice that. So there's two very significant sweeps of liquidity and data points hit there. So as soon as I see that, I'm just like waiting for this candle, and I'm in. Full risk on this trade. And because of the date, the 22nd, and it's Monday, and everyone's saying, you know, it's going to be low volume, and it's correct, because look, we consolidate a lot here, okay, and we eventually hit TP, but it's a slow grind. All right. Now, a couple of things about this trade. V shape, I can call that a V shape. I'm going to call that a V shape, even though you'd want to see less candles here. Higher time frame delivery, new week opening gap, Asia lows, and that's time based. Time-based liquidity sweep along with higher time frame delivery. Equal highs or low for target. Yep, I think I had, yeah, so equal highs here, even on the lower time frame, they count. This is a liquidity pool. So you want to mark that out. Okay, that will be your target. If you want to target up here, that's your break even. All right, but me, I'm not greedy. At 1.8, I'm happy with. Okay, 37 handles, I'm happy. I'd rather high risk it and get out of the trade rather than trying to go for long moves. Okay, that's why we're on the lower time frame. That's important. Break even, this would have been break even. Here, we don't need a break even, do we? Look, we're just going straight for TP. There's nothing, this could be considered low resistance liquidity here. All right, that there. This is a retracement, and of this range here, you could say we're at a discount, and we are bullish because we want to get up to and finish these equal highs here. Okay, but that's another story. We won't get into all of that now. The main point is that if you take a long and you feel like you're unsure as to whether we're in a premium or discount, or we might turn around, just get in and out as quick as possible. Don't hold your trade. Okay, I can't actually remember what happens here, but we'll see in a second. Kill zone, are we in a kill zone? No, 38, yeah, so New York kill zone, so great. So this is like an A setup, maybe a B plus. It's not A plus, but it's good enough for me to go in all day long. I do remember feeling like we could turn around and go down from here, which is why I chose this as my TP. All right, let's see what actually happened, because I can't remember. Was that my last trade? 22nd, I think. Did I trade on the 23rd? All right, yeah, I'm pretty sure there was one more trade at least. Okay, all right, so a slightly different setup, but worth recapping for sure. All right, let's have a little look. I didn't take this trade. This is hindsight of this, but I just wanted to show it. Yeah, no, I didn't take this. I wanted to show it just because it's got some interesting features that we can just review. All right, so what are we seeing here? 15-minute inversion fair value gap created at the end of Asia. Can you see that there? So as we come up here, before London, we invert this 15 minutes. So again, we're still using IFVG, it's just a higher time frame. Okay, at this point, at London Open, I want to dip down into this. This is a 15-minute IFVG, and of course, it's also a 15-minute bullish here. So this is what we call balanced price range. This is a very strong support level. So when we dip down into this, I don't think I was even at the charts. Otherwise, I would likely have taken this. And what do we see here? Let's have a look. 1 minute inversion right here. Okay, create a London Open there. So London Opens, we come up. As soon as we start moving down here, my eyes are on this. As soon as we create that and we tap under it, that I'm marking that out. We tap into our 15-minute inversion fair value gap, and then we invert another fair value gap of 1 minute to the upside. That's our entry. Here we enter. Okay, what happens on this trade? We enter on this candle here. We come down, and your stop would have been just underneath the candle that created the bearish. Okay, that's a very tight stop with 3.5. Okay, that's a very, very tight stop. You know, if you wanted to, you could very easily put that there and you'd have stayed in this trade. However, as the rules are at the minute, and I love tight stops, because if you do get stopped out, you're losing hardly anything. Okay, this is like a 5R. Okay, we get stopped out, but again, the beauty of this model, we re-enter. As soon as you come below here and you're still bullish and you're still confident in your draw on liquidity, then, and we get another bullish fair value gap, okay, which closes again above, you just re-enter confidently. Like if we're bearish, we're very unlikely to get a bullish fair value gap at this point if we're going down. Okay, it can happen, but rarely. So I'm re-entering there confidently and straight to TP. What do? We come up, tap down into our entry, the top of this here. Okay, what do? Straight to TP. What was my TP here? Asia Open. Okay, so open and close or high or low are good targets for TP. These are things you're going to learn over time. This is your break even here. As soon as we get to break even, we're pretty much straight to TP anyway. That would have been a decent trade. again, I didn't take this. This is hindsight, but that's what would have happened had I been at the charts at that time. I hope you're starting to see the power and the simplicity of these inversion fair value gaps. I've literally seen nothing like this in the charts, and I've tried a lot of different strategies, indicators, you name it, and I can't believe I am actually kind of in shock at how simple this stuff really is. And that's always the way with the best things in this life. It's simple, man. Keep it simple, which is difficult with trading because there's so many different ways you can interpret these charts. Okay, so what date is this now? 23rd. Okay, so which one of these did I take? I'm pretty sure I took one of these. Oh yeah, okay. So just before market open, I didn't take these. These are again hindsight, just marked them out so we can recap them. But this trade I took, and another example of taking so I took a loss, re-entered, size down. Okay, so here some people may want to keep their stock. Let's start from here. So do we have accumulation, manipulation, distribution? That's the AMD model. Liquidity sweep back into the new week opening gap. Beautiful. Okay, that's what you want to see. So as soon as we are at this point, we are at 8:30, not much going on, then we got to move down here. I don't like to take trades just before New York open. This is why, but again, you size down, you just manage your trades differently. I wanted to be in because I was unsure how price would behave at this time of the year, because I've never traded this Christmas week before, and I'm hearing a lot on YouTube. But for me, I got a lot of faith in this model. I know it prints, so I was in the charts regardless, and managed to reach a payout on my birthday, which was great. Okay, so we're back into the new week opening gap, and we are looking for clean V shape. This could be considered pretty clean. Yeah, pretty clean. You still, again, a clean V shape really means like one candle straight through. One candle, balanced price range, Sibby Bissy, straight through, yeah, which is rare. But when you get that, you're high risk and you're full porting on that. It's crazy. It's like I'm in, right? But in this case, that's clean enough. I enjoyed that. I entered on that. I was pretty confident with it as well. Stop below the gap. I mean, if you was to have put your stop below this candle here, which we often do, I just don't like a 30-point stop. I wanted to put a nice risk on it, so I have my stop here, and that's just how I do it. You're going to do it your own way. It's fair enough. Beware, price often likes to re-enter into 50% of these high time frame PDOAs. So that's what's happened here. So I got stopped out here as we came back down, and that was cool. And what I love about this model is that I'm just looking to re-enter. It's cool. I'll take that loss. I'm looking to size down and re-enter. And LRL, this is your LRL here, lows of it. Make sure I'm looking at that. Yeah, LRL's here. It's not marked out, but that's pretty easy to see. Equal higher targets. These are relative equal highs. Okay, not completely equal, but decent enough. These are two decent liquidity pools. That's what you're looking for. Break even. Your break even would have been here. Okay, it's a strong move down. This could be considered a liquidity sweep. So if we are going to turn around, which we obviously don't, we should break straight through that. That's where you would put your break even. I haven't marked it out, but that's where it is. Premium and discount. We've come right down into a discount there of this range. These are things you're going to have to feel out again over time. All right. I was convinced we were bullish from this point because we've just come down, we've swept these lows, we've tapped into this gap. I'm thinking we are not going to break down through that new week opening gap. I just didn't see that happening, so I was very confident. I didn't even really need premium and discount. Kill zone, yeah, market open, that's what we love. Took a loss here, re-entered here, sized down, and as you can see again, what do we love to see at market open? With just one candle, two candles straight to TP. I took 90 handles on that. So on this one, on this loss, I lost 20 handles, took 90 on there, so 70 handles. That was a nice big win. That was my last trade of the year. And what a way to end the trade. So make sure that your 1 minute is marked out. As soon as we dip down into this gap, I'm marking out the 1 minute. Enter here, take the loss. Re-enter where? Just to be clear, as soon as we invert this 1 minute again, I mean, potentially it would have been this candle, I'm pretty sure I ended there. Enter, stop below the gap, keep your stops tight. Keep your stops tight. Don't think, oh, because I've taken that loss, now I need to go down. The fact is that it's come down and had a couple of taps, it's very unlikely to come down again. But again, you're going to manage your risk in your own way. That's just me. That's how I play it. Right, hindsight trade here. Last one. Didn't take this. This was my last trade of the year. And let's see how this one looks. London high, I guess. 1 second. The target was... Okay, yeah. So the target for this trade was London high. We then come up and sweep Asia high. I like to target the previous session's liquidity rather than the one before that, because we often can just leave equal highs and not get that. So you could have had a second target for that long, but I was all out at London highs. Then we have Asia highs. Swept Asia highs. Again, another 1 minute. It's right there. As soon as that forms and we sweep Asia high, I'm looking to enter on the close below the 1 minute. Very simple. There's your 1 minute. There's your entry. Stop above, 26-point stop. What's this? 2.2, basically a 2R. And look how quickly we get to TP. As soon as we see that 1 minute bust, we're entering. Again, I didn't take this trade, but I would have taken this trade if I wasn't finished for the week. But I wasn't looking to give back. I made a massive win here. I wasn't going to give none of that back to the markets. That's important. When you've won, stay out of the markets. Finish. Leave it. That is the trade recap from last week. And I absolutely printed and made a killing last week on my funded accounts. And that was a week where everyone was saying it's going to be dead, don't trade, stay out of the market. This is the 1 minute IFVG strategy. It's simple. I think that that's simple. There are some nuances and subtle differences that you would need to learn over time, but this is the simplest and most effective strategy I have come across after trying a lot. And these videos are to help you see how simple it is, and hopefully you start employing that and start making some money in these charts, man, because trading can be crazy and lonely, and you need something simple and mechanical. Otherwise, it's going to take time to get anywhere in this game. So hopefully this helped. Leave any questions in the comments. Just for real, man, just shout out. If I can help, I will. I'm going to start live trading. I'm intending to start next week, meaning tomorrow. It's Sunday now. But I need to get a few things set up, and I'm not entirely sure. I've got other things that I may have to do. I'm trying to tie this in with work at the minute. I'm in the process of transitioning between self-employed sort of part-time work and into trading. Okay, and hopefully with a few more payouts, I'll be able to do that. But just subscribe, hit the bell, make sure you get those notifications, and when I do go live, we can get into this properly, and any questions you've got, we can trade in live time, and I can answer those questions for you. All right, well, I hope you all had a good Christmas. Hope you have a blessed New Year's and all of that. And yeah, man, obviously support the channel, like, share, comment, and subscribe if you haven't, all that good stuff. But yeah, man, take care, stay blessed.